Monday morning, folks, and welcome to a brand new episode of FINMET Mondays. We are back after 2 weeks, and a lot has happened in the market, Sunil. Maybe we can start with just recapping some of the events from last week. Also, you've been talking to a lot of market participants, specifically on the physical side, and they have some interesting insights too. So, if it would be great if you could share those with us on today's podcast.
Yeah. So I think carrying on from where we left off, we were expecting that there would be a pullback from the levels of 2600. And we saw a brief pullback, but then there was a rush of buying. And I've been trying to unpack really where the buying was coming in from. So we broke all the levels that you were talking about being resistances, and we're now above those levels and they act as a support. So what I've heard is there was a couple of things that have happened. One is there continues to be a very strong investment bias in favor of gold. People are rotating out of equities and bonds and getting into gold because of the uncertainty of the Gulf War, the elections, the inflation outlook, the Fed outlook, etc. And you've seen a lot of movement in currencies. So you saw dollar weakness that helped gold also. So a lot of stuff that's happening with other asset groups is driving investment into gold. And that continues to be a story, especially in the West. You hear a lot of investment funds coming in and buying big amounts of gold. Um, Last time I also mentioned that the physical markets in Asia had reacted very negatively and they were very quiet. What has changed, however, in the last 1 week or 10 days is that the dollar's weakness has led to strength in the local currencies. And what it's meant is in local currency terms, gold is actually cheaper than it was, for example, when the gold was at 2400, 2500. So that has meant that buying is taking place. So we're hearing stories from Turkey, for example, where premiums are now 20, $25. In Thailand, premiums are about $3 or $4. So a lot of the markets where people buy in local currency are seeing the dips in gold prices and they're coming in and buying. Similarly, the renminbi has strengthened against the US dollars. Renminbi prices are lower. China demand has also picked up. So overall, the story for me for the last week or so is that besides the investment buying, we now started seeing physical buying. A lot of that buying is non-jewelry. It's investment buying also, but it's from the Asian retail markets, which is very interesting, I think, which shows that this rally may have more legs to go.
I think also the technical outlook would be something people are really interested to know about. Let's quickly jump into that, Sunil, and see what the markets are going
Sure.
to play out in the following week. So, Sunil, here I have the 4 hourly charts of US spot gold. I have built a few structures that I think are representing what seems to be happening in the market. Now, firstly, you see the formation of these two bullish flag patterns, wherein you have a full leg up, you have a period of consolidation, and then you have another leg up, right? This has happened consecutively twice, once over here, and then you again see that happening once over here as well, right? So currently, if we have to interpret what's happening in the markets, we're still waiting for some signal and direction from the fundamental markets as you see them consolidating. Before I would expect this threshold over here, which is this black line, to be broken before we can see another leg up. The question is then, where are markets going to extrapolate to, or where can we expect markets to extrapolate to in the event we see a breakout above this zone? And I did some checks from the historical data, and that it turns out that we can expect markets to rush up to 2780 to 2800. This is very similar to some of the outlooks I saw on Goldman Sachs and some other banks in terms of their gold projections for this year. So 2800 is where we could see the all-time highs for gold reach this year, but again that would have to be supported by some fundamental data as well, right? In terms of the resistances, we have to break the 2690 resistance in the immediate term. We also have the 2750 resistance that's more of a long-term resistance trend that bulls will have to break. On the downside, I do feel markets are waiting for some more direction. there's going to be some play around 2645 to 2630. This is where the markets have been finding some comfort. We've definitely established a floor around 2590 to 2600. That seems to be the case with the markets from 2 to 3 weeks back. So all in all, I think this range above 2600 and this range between 2690 is where we're seeing a lot of traction. It's only a matter of time. I believe that this resistance here in the black is going to be broken, and you would see this jump above this level over here. In US spot silver, uh, a very similar flag pattern seems to be emerging on the 4 hourly charts. But the interesting thing over here is you've seen that the markets have already broken out of this flag pattern on the upside. I'm technically much more bullish on silver. I think that there's a lot of potential in silver that bulls have just not unlocked in silver. A lot of this is dependent on the economic situation in China. The demand from China will dictate how the price action in silver also moves. But this is an interesting thing that we observe, which is even on the RSI, you see that there's a lot of momentum here to kind of move into the really heavy buying zones. And you already see a breakout that has happened last week. So silver bulls are already showing signs of a breakout above 32.7 and then an eventual leg up to 33.6 or even 34 levels by the end of this year. In the economic calendar, we already covered that the non-farm payrolls data last week has been a little bit of a surprise. It has shown that the US jobs market is a lot more stable than we initially thought. What this is going to mean is the Fed is not going to be as aggressive in its interest rate easing cycle as we previously thought. This will definitely play a role in capping some of the gains in gold and silver. In terms of the economic data that we have the FOMC minutes coming up on Wednesday. This is just to understand what was the exact outlook that the Fed may have in their past meetings. And more importantly, we have the core inflation rate or the CPI inflation rate readings that the participants should also be looking forward to. So these would be the main data points to watch out for next week. Net net, the outlook for gold and silver still remains bullish. In silver, we've already have a technical bias that we think will push it to the upside. For gold, there are a lot of fundamental factors driving the metal to the upside, but from a technical standpoint, it does need to clear some levels before it can create this new all-time high. Thanks, Neil.
Interesting.
Thanks for sharing some light on the fundamental side and the demand side. Let's see how the markets play out. But till then, thank you so much and goodbye.